Good afternoon, Elizabethtown area, and welcome to the third session of Etown Links, a series of webinars carefully curated to give you only the best, most relevant information on running your business in the light of immense change and upheaval due to COVID-19. This partnership with Elizabethtown College and Elizabethtown Area Chamber of Commerce. Through it, we invite local experts to give you what you need to know in under an hour. Hopefully, maybe while you eat what is your takeout lunch from one of our fine local eateries offering pickup and delivery. I'm Kelly Fuddy, the former membership manager at EACC, and I've come back in this time of crisis to co-moderate some discussions aimed to serve our members, our non-members, anyone who's looking for a place to find hope, guidance, and camaraderie. We want to light up that Etown spirit to help you not only survive, but to innovate and thrive during this exceptional challenge. I'm also helping out at this time on the operations side of the chamber while we hire a new executive director and digital media specialist. So from that hat, I also want to remind you to follow our social media for the latest updates on the efforts of the Economic Development Company and the Lancaster Chamber to coordinate the distribution of our county's federal stimulus funds. They've created a new program together called Recovery Lancaster, and that website is now live, recoverylancaster.com. In the coming days, their portals will be opening up where you'll be able to apply for free PPE for businesses with 100 or fewer employees, and up to $35,000 grants for businesses with less than 20 employees. So more details were sent to you in an email, anyone who gets our newsletter this morning, and they're also available on our Facebook page. No show so far would be complete unless I tell you where my earrings are from. They're from 3rd Street Vintage in Columbia. They're not a member, like I like to say, yet of the chamber, but the two business owners are local from Etown. They opened their shop in February and shortly obviously had to close back down. So visit them, your money stays local. My dress is from Now Wear This chamber member, and the watch that is missing from my wrist is waiting for me at Andrew Douglas where it's being repaired, and I can't wait to go there on Friday as soon as they're open back up and get it. My partner in crime today, my co-host for these sessions is Dr. Matthew Fritz, Associate Professor of Music at Elizabethtown College, and I'll allow him to introduce himself.
Good rainy afternoon, everybody. My name is Matthew Fritz. I'm Associate Professor of Music at Elizabethtown College. I get to direct the community chorus there along with students on campus in a lot of other areas, but I'm really happy to be here to be co-moderating this great resource for all of our business owners. And I am wearing my Etown concert choir shirt from Etown Sporting Goods downtown. So we always like to support the local businesses as we can throughout. So we're glad to have you here. We hope you take advantage of this session. There's a Q&A button at the bottom of your screen. At any point along the way, if you'd like to pose a question, I'll be monitoring that and then ship them off to our wonderful presenters, and for hopefully what will be a lively discussion for all of us. And thank you so much for being here. Toss it back to you there, Kelly.
Thanks, Matt. Like Matt said, there'll be time for Q&A at the end, and he'll be moderating those questions and sending them to our presenters. This will be after our presenters share the information they've prepared for you. Reminder that this is a public open event and will be recorded and later published to the Chamber YouTube channel, where you can already find weeks 1 and 2. So without further ado, I'd like to introduce you to our guests today. First, we'll be hearing from Jon Sattazahn of Jon's Tax Service. He was trained in how to prepare income taxes in 1999 while he was serving in the Army. He served 4 years in the U.S. Army working in the finance and accounting field. He graduated from Crown College in 2006 and started Jon's Tax Service in 2008. He moved to Elizabethtown in 2011 and relocated his business here in 2012. He's earned the EA, which means Enrolled Agent designation in 2019, which is the highest credential that is awarded by the IRS. Our second guest is Randy Fackler. He's a principal and the tax director at Brown, Schultz, Sheridan Fritz, and is one of the key members of the firm's tax department. He received his Bachelor of Science degree from Shippensburg University and a Master of Science in Taxation from American University. As tax director and principal at BSSF, Randy will be responsible for managing tax consulting and compliance services for his clients, as well as overseeing the tax department. He has over 30 years of experience in public accounting and working with clients in numerous industries, including manufacturing, retail and distribution, healthcare, professional services, and high net worth individuals. He assists clients with general business advisory services and such as tax accounting methods, tax planning and consulting, cash flow needs analysis, merger and acquisition analysis, product profitability analysis, forecasting, and more. He joined BSSF in 2017 after spending 27 years with PricewaterhouseCoopers in Baltimore, Harrisburg, and Philadelphia metro market. Randy is a member of the American Institute of Certified Public Accountants, as well as the Pennsylvania Institute of Certified Public Accountants. And additionally, he's very active in the community. He's volunteered with numerous organizations like the Hershey Aquatic Club, Four Diamonds, Ronald McDonald House, Shippensburg University, and United Way of the Capital Region. So first I'm going to hand it over to Jon, who is going to give us some very, very timely advice about what's changing with taxes. Thank you so much for being here, Jon.
All right, thanks, Kelly. So most of you, I think, probably look at taxes as something that's not very exciting. So hopefully that'll change this morning. I kind of keep your attention with this. I know, as I discussed earlier with our panel, I'll watch tax videos and find it really interesting. And my wife's like, how can you watch that stuff for hours? So hopefully you can all stay awake here and hopefully provide some valuable information. So one of the questions I get asked the most as a tax preparer is, what do you do when tax season ends? So of course, most of us take a little vacation, but that's also the time when we spend studying for the upcoming tax changes, going to seminars, learning more. So this tax year, of course, these major changes came out right in the middle of our tax season. So there's a lot of new things to go over, and I don't think there's any single approach for any specific business and things that we should focus on. I think every business is different, and there's different things that need to be looked at there. So I do have my first slide is the tax laws and some of the things that have been changed. So if you have any questions about this, or you're watching it later and something comes up or you think of something, you can click on that link. There is a search feature for the laws. So if there's something specific you want to look for, you can feel free to click on that and follow that, and hopefully that will answer your questions. So one of the things I wanted to talk about is the changes in the tax due dates. So by now, most people are aware that July 15th is the new April 15th. If we can go to the second slide for me. And some of the things we wanted to go over is, as most self-employed people know, April 15th, first quarter payment is due, and any taxes you owe are due. So it's almost like a double whammy for self-employed people. Well, now this year, if you wait till July 15th to file your taxes, you have your first 2 quarter payments are due, as well as the taxes you might owe. So just keep that in mind for budgeting purposes. Now, tax returns or estimated payments are typically based on what your income was for 2019. 2020 is going to be a different year for everybody. So I wanted to point out that if you've already scheduled your estimated payments, or you have money coming out of your bank account and your financial situation has changed and that money is not going to be there, I have the number on the screen here, the 888-353-4537, that you can call up to 2 days before that payment is scheduled to come out and cancel that. That is open 24/7. So feel free to give them a call if you need to delay that. I always have people ask me, like, what if I can't make this payment? What should I do in that case? If that's the case, then if you don't have the money and it comes down to choosing between buying food, paying rent, then take care of your family first before you worry about trying to make an IRS tax payment on that. Right now, I'm gotten 2 calls this week already about Pennsylvania tax refunds and when are they coming in. And I've heard back that they're running on a skeleton crew right now. They just started processing some things, and there is major delays is what the email stated. I do not know what time frame major means, but if you're waiting on a state refund, it will take a while. The federal government, if you've e-filed your tax returns, most of those are still coming back in a normal time frame. If you've mailed anything in, from what I understand, the IRS, the Postal Service, has ran out of room on where to put the mail at this point. So they started delivering to a warehouse. And last I heard, there was about 10 million pieces of unopened mail at this time that they have to go through. So if you've mailed anything in, it might take a while for those checks to be cashed or for amendeds to go through, or for you to even receive that refund, if that's the case. All right, and then I wanted to go over the FICA and self-employment tax delays. If I can get the next slide, please. So what's going on right now is if you are a self-employed individual, half of the employer portion of the self-employment tax. So if you're an employer, you know that you withhold Social Security tax from your employee's paycheck, and then you have to match that same amount. So that amount that you have to match can be delayed for the next 2 years, where 50% owed by December 31st, 2021, and then the remaining by 2022. So if you're having trouble right now with cash flow, this is an option you can look at. If you are not having any kind of difficulties with your business, it's one of those things I recommend that you try and keep ahead of your taxes, because all you're doing is pushing this down the line, that next year with what you owe in taxes and this amount's going to be added to it. So if you're all right to pay that this year, then, you know, try and stay ahead. But if you're struggling financially, this is one area that you can look at and kind of try and help with your cash flow and save some money there and delay that payment a little bit. And I wanted to talk about some scams that are going on. So one question I get asked every year, actually several people always call me, I got a call from the IRS, and usually before they finish that question, I'm like, it's a scam. Unless you've called the IRS with a question and you're waiting for a call back, they are not ever going to reach out to you and ask questions. They're not going to try and verify your bank accounts. They're not going to do any of those things. So if you receive any of these phone calls, please do not give them any information. I would just hang up the phone immediately or ask for a call center to call back if you're concerned it could be legitimate. But they will never reach out to call you. Right now, people are mailing out fake checks for different things. So you just need to be aware. If you have questions about a check, whether it's real or it's fake, when you take that to the bank, make sure you're asking these bank tellers, you know, have you seen these before? Is this real? They will be happy to look at that for you. They see this stuff all the time. So please don't take any checks and just deposit it and assume that it's real. As well as telemarketers calling you, or even banks. For instance, I had applied for a home equity loan the other week, and I got a call from the bank, and the person said, I'm calling from M&T Bank, and they identified themselves. If they call and they say they are from the bank, but don't identify which one, make sure it's a bank you're dealing with and it's not somebody just out there fishing for information. Right now, a lot of people are applying for different loans. So when they're getting a call saying this is the bank and I'm calling for verification details, sometimes they are thinking, well, I'm in the middle of doing a loan, but make sure it is the bank that you're dealing with that's calling you. As well as telemarketers calling, fishing for information. Right now, there's a lot of people home that have nothing to do, that are lonely, that are happy to talk to somebody. And they don't mind talking about their kids, their grandkids, where they went on vacation, pets. And you have all this information that's being put out that the person may not be targeting that individual. They may target the kids, but they're finding out information that they can use for password hints and things like that. So if you have family members that like to talk to telemarketers, make sure they're not giving out any kind of personal information. I know several years ago, my grandmother got a phone call and they said, hi, Grandma, and do you know who this is? So she has 10 grandkids. So she's like, is this John? Yeah. So they had a 20-minute conversation. And at the end, the person asked if she could keep a secret and said that I was in Mexico and was arrested and they found drugs in the car. Well, my grandmother knew right away that wasn't the case. It's tax season. I wouldn't be in Mexico at that time. So she hung up the phone. However, many times there's people that, you know, they believe that's possible. They'll give the money out. They'll keep it a secret. They see their grandkids at Christmas time and think, well, they never thanked me for that money I gave them or said anything more about it. And neither one of them knows that either one of them's been scammed. So just be careful that people are aware that, you know, for these calls coming in, not to ever give out any kind of personal information in dealing with that. Let's see, and if we can move to the next slide, I just want to talk about unemployment. So I borrowed this slide from a seminar that I was part of. If you're not working because of COVID, I want to say there's no shame in applying for unemployment. This is insurance that you're paying as an employee. You pay in money off your paycheck to cover insurance. Your employer pays into this program as well. So if you're eligible for it, go ahead and file for it. I've had people tell me that, well, I'm doing okay. I think there's other people out there that need the money more than I do. And I just want to say, it's kind of like car insurance. If you paid for that and somebody runs into your car and you say, well, I could afford to fix it myself, I don't have the insurance money. You say, no, I pay for insurance, so I want to go ahead and use it. It's the same thing with unemployment insurance here. If you're authorized it, go ahead and file for it. It's better to have it and not need it than it is to find out later on that you might need that. Now the federal government is picking up an extra $600 here for anyone that is filing because of the pandemic. And unemployment is taxable for the federal government, for the federal. So I do recommend that most people have taxes withheld from that. Worst case scenario, you find out at the end of the year you don't owe taxes on it, you would get that money back. But there is certain cases where you won't have to pay anything on it, you would get it back. But I would just recommend it's better to be safer and get it back at the end of the year than it is to find out that you're going to owe money on it at the end of the year because you didn't have anything withheld on that. Right, and then the last one I wanted to go over was just one change with the student loan interest on the last slide that I have. So one change with the law that is only in effect for this year is for student loans, the employer can actually pay money towards the employee's student loans, and this is a non-taxable benefit. So this is in addition to like the $5,250 they could normally pay for education benefits. So just to say, for instance here, if an employer writes out a check for a bonus for $1,000 to an employee, after taxes and things, the employee might end up with like $700. The employer ends up paying with payroll taxes, probably like $1,100. So really there's like $400 in there going to taxes and things like that. So this would be kind of like a win-win for both the employer and the employee. So the employer could write a $1,000 check right for the student loans. The employee gets that money without any taxes taken off. There's no payroll taxes for the employer or the employee. So the employer is saving payroll taxes, employee is saving tax money on that. So it's not something you really should have to try and sell too hard as an option. So if you're looking for a way to kind of reward employees coming in right now during this time period and they have student loans, this may be something, instead of adding to the hourly wage, that you could pay something towards their student loans, or instead of paying bonuses, this is an option that you could look at as an option without increasing your taxes with a straight payroll, with a straight amount without paying payroll taxes. So this is only good till the end of this year. So this isn't something you can look at for next year. So if you're going to look at this as an option, make sure you do it by the end of this year. So that is the end of my presentation. So I hope you guys found some of this information helpful. And if you have any questions, please let us know. Thank you.
Thank you, John. There was some really good information there that I didn't know about before. So thanks for sharing it. Can I ask you a quick clarifying question about the last student loan assistance?
Sure.
So if your employer pays for those, do they have to be student loans that are still held by the federal government? Some of us are maybe 16 years out from college and our loans are held by Deutsche Bank or somebody like that. Would those still qualify too?
Those should still qualify. And one other thing I forgot to mention with that, if you are going to do that, the employee can't deduct the student loan interest on their income taxes then later on if that's paid by somebody else. However, it's better to get it paid by an employer than it would be to deduct it that way in that case. But yes, that should be fine if it's held by somebody else, that you could still use that as deduction.
Thank you. That's good to know, because I know that the withholding of the payments was only for those held by the government. Thanks for sharing.
Sure.
All right, and now let's move on to Randy's presentation. Randy Fackler is next to share with us some more details about taxes.
Okay, I'm going to share some information both from an individual and a business standpoint with respect to the CARES Act. And then as John said, you know, normally April 15th is a big time for us. And well, it was a big time for us this year. It was just not dealing with necessarily with the filing of all the tax returns, because we had we had the various acts that came out. We had the PPP loans that we were all dealing with, and so it created a different type of environment during that time period, and we had to do a lot of, in addition to trying to continue to get taxes filed, we had to do a lot of different things and work with clients in different manners, with all the new things that were coming out. So with respect to the CARES Act, there were a few items that I have on my next slide that talk about provisions specifically related to the individuals. First being, the recovery rebates, where it was $1,200 for single, $2,400 married filing jointly, and $500 per child. However, there were limitations from an income standpoint. If your adjusted gross income for single was below 75 or below 150 married filing joint, then you were eligible for the full amounts. There was a phase out on the single side between 75 and 99,000, and then on the married filing joint between 150 and 198. The rebates were based upon the 19 return if it was filed. If that had not been filed yet, it was based upon 18. And rebates came out, if you had all your bank information in, they came out electronically. There are some now coming out via debit cards. And then some checks were issued also. The other thing from an individual standpoint, retirement funds, there's a waiver of the 10% penalty withdrawal for distributions up to $100,000 made after January 1, 2020, if the distribution was related to COVID. And then there's a temporary waiver of required minimum distributions for the 2020 year as well. And then in addition, for individuals on charitable contributions, there's even if you do not itemize, for the 2020 year, there's a cash contribution deduction up to $300 to churches or charitable organizations. Again, as I said, regardless of whether you itemize. And then there's a temporary suspension of the AGI limitation in 2020 for contributions made to qualified charities. So those are the areas in the CARES Act really that affected the individuals. Next, we'll go to the next slide for some of the business-related provisions. So in the Tax Act that came out in 2017, there was a lot that happened with respect to net operating losses and limitations, and there were modifications to that. The Tax Act limitations were modified as a result of the CARES Act, and therefore it allowed you to then take a net operating loss from a business standpoint, and you were able to carry it back for 5 years for tax years 2018, 19, and 20. All this was in an effort to, if you had a company that had NOLs, be able to take that money back, and if they paid tax in a year that they were at a higher tax rate of 35%, they were able to go back and get the money back. Additionally, there's a provision related to individuals, more so under Internal Revenue Code Section 461, that gave taxpayers the ability to take aggregate trade or business deductions. There was a cap placed on those amounts, and this gave you the ability to take those deductions and take a carryback on that as well. which was, again, all of this is in an effort to put dollars back in taxpayers' pockets so that they could put that money back into the economy. Also, alternative minimum tax was repealed as part of the Tax Reform Act, and you were able to get those, if you had alternative minimum tax carry forwards, you were able to get that over, get that refunded over 2018 through 20, with the final amount being refunded in 2021. As a result of the CARES Act, any amount that wasn't recovered in 18 can be recovered, could be recovered in 19. And if you could even make if you hadn't filed an 18 return yet, you could make an election to have that amount recovered in 18. So again, another method to put money back in the hands of the taxpayer. So if we could go on to the next slide. There were modifications also to the business interest deduction, where that was at 30% of adjusted taxable income, and that went up to 50% for 2019 and 20. And then there's specific rules with respect to what partnerships can use and how they can use that adjusted taxable income in determining what percentage it's applied to. As part of the Tax Act, there was an imperfection in what came out with respect to certain qualified improvement property with respect to restaurants and retail businesses, which took the property from a 15-year property to 39 years as a result of the Tax Act. And we had been waiting for a technical correction on that. That technical correction came as part of the CARES Act, which took that out of 39-year property and back into 15-year property. That could be corrected either through an accounting method change or an amended return. And then in addition to, while there were charitable contribution changes for the individual, there were also contribution limitation changes for the corporation as a result of the CARES Act, and the limitation went from a 10% to 25% of taxable income in 2020. Also, the deduction for food inventory increased from 15% to 25% in 2020. And I'm going to add, this was not part of my actual presentation, but wanted to add a comment or two that Jon talked about some of the IRS delays and stuff with respect to processing things. The IRS has recently opened a few offices to start handling some of the backlog of mail and stuff. But they've also, in opening those offices, they've said to the employees, come back in if you are comfortable with that. So the service is not fully operational. I was dealing with someone recently for a client with a taxpayer advocate group. The taxpayer advocate person talked to me and said, we're not even allowed back in. We don't know when we're going to be allowed back in. We can't work remotely. We can't get faxes. We can't get emails. So we're just kind of on hold. So things are still going to be slowed from an IRS standpoint. And then Jon also talked about the FICA and Medicare tax and the delay. And I know that there was a previous presentation, I think, on the PPP loan. There's intricacies with respect to the PPP loan and those delays. However, as we've seen over the last 2.5 months, things are changing on a daily basis. And even some of those things with respect to PPP loans are changing and being extended possibly. And again, I know that that was the topic of another conversation, but there's guidance coming out every day and updates coming out regularly. A bill that was passed by the House would change some of the PPP loan qualifications, requirements, and stuff. So again, I know that that was topic of another conversation, but it's changing and evolving as we speak. So I just thought I would at least. I was on a call this morning where they talked about some of those changes and what has occurred, and just thought I should at least mention that. That if you were part of that, you need to be paying attention and talking to whoever your advisors are, because things are changing in that area as well. And so, Kelly, I'm going to turn this back over to you at this point, since that's my portion of the discussion, and so I'll turn back over to you. Kelly, you're still muted.
I'm sorry. I thought I had fixed it. Thank you so much, Randy, for sharing with us. We're glad that you enjoy refining all this information about taxes so that we can just get the little tidbits that we need. I thought I knew a lot about it, but you guys both, John and Randy, gave me a lot of new information. I'm going to actually hand it over to Matt to start the Q&A. I know we've had some great questions that have come in for clarification.
Yes, thank you both so much for your informative presentations. So we had a couple of questions coming in. One, or request rather, if you could discuss a little bit about the waivers for retirement withdrawal and the 10% penalty. Does that apply for all of 2020? How do you prove that in the COVID purposes?
So it applies, yes, it applies to all of 2020. And at this point, what we know is you have to say that that it was COVID related. I don't think there are going to be a lot of challenges around it based upon what we've been going through. What I would encourage is just document your reason. Have it as part of your files and records, and again, I would not expect a lot of challenges around that.
Okay, thank you. Another kind of a follow-up question to the discussion on the federal recovery rebate funds. Those funds who are received, are they taxed by the state?
I don't think the state is taxing them, those rebates. I've not seen that. Now that doesn't say that a state may not come out later and say they're going to choose to tax it.
Okay, thank you. We have another question in. With tax extensions, when is the last date to file 2019 returns?
So that one they could file July 15th is the last date unless they file an extension, then that would extend that even further. But the last date to file without any kind of penalties would be July 15th for individual.
Great. And I guess a little follow-up here. If you didn't file yet or did file but didn't send your payment of tax due, holding it so you can keep the interest instead of the IRS, is that reason you wouldn't have received your stimulus yet?
That should not have affected the stimulus payments at all.
Yeah, there should be no impact on I would agree with John. There should be no impact on that. And the question I would say is, was your, number one, was your bank account information in the system? Because if not, then it's a manual check that's being processed, or you're going to get a debit card. And those processes have been slower than the electronic transfer.
And make sure your tax return address was correct when you mailed it in, that you didn't move since then.
Matt, I have another question that came to me. Let me scan back up to it. I don't think you asked this one, Matt. If you qualified for the full recovery rebate, based on your 2019 income, but now you're in the prorated income, like within the prorated portion for 2020, will that affect your potential tax refund when you file your 2020 return?
I'm going to say to be determined, because they, again, as things change, they could come out and say, because of 2020, where you are at 2020, we're going to take some of that back. I've not seen that for sure, and John, I'll let you jump in and see if you've seen anything. But again, things are changing, so I wouldn't want to just say no, because things change also.
I would agree with that. 2 months ago, I would have said no. Now the way things have changed, anything is possible at this point. So I would feel like the answer should be no, but things have changed on that. So I would agree with that, to be determined is a very responsible answer.
I think you guys are going to have a really busy year answering questions.
Yeah,
well,
and I'm sorry.
And it's gonna be this year, and it will flow over. If some of the changes that they're talking about with respect to the PPP loan go through, it will flow. Some of this stuff will flow into 2021 as well.
And I think one of the big questions a lot of us have on all of these issues, that there seems so much is changing, it seems day to day, on not only tax policy, but recommendations for safety and those sorts of things. And on the tax side of things, do either of you have some general suggestions that or advice that businesses could use, where they could go for the best, most up-to-date information on this topic?
Well, one of the things I would say is whatever the topic is, the IRS has on their sites has a lot of frequently asked questions that they update on a regular basis. So you can go into the IRS websites and look at those frequently asked questions and get a lot of pertinent information. And as I said, they update those questions on a regular basis also. That's one option. John, I'm not sure if you have there are other things you've seen as well.
I think that's probably the best option. I know I've attended several seminars, and during the seminar, things have even changed. So it's kind of frustrating, I think, for all of us trying to find the most up-to-date information out there. And sometimes we read the information on the IRS website, and then we hear a news conference and it contradicts that. And we're like, so what's correct here? So yeah, I would say the IRS at least should have the correct information. That's probably one of the best places to go, or read something in the government bills, but then that's always subject to change later on as well.
And the government bills tend to be many voluminous pages. So that's why I go to the frequently asked questions. That's, because that's they're providing the interpretation. So.
And it's easier to understand, I think, than reading government bills a lot of times too.
Yes.
And presumably the IRS offices, as they gradually reopen, will also have agents and folks that we can call to get specific questions answered. Yes. Yes. And we don't know right now when all of that, when everything will be up and fully operational from an IRS standpoint.
I'm guessing it's going to be well after July 15th, as far as them being able to answer questions about next year too.
Yes. There has been, and one of the things, and I've not heard this recently, but in a month ago, there was discussion of, even from an IRS standpoint, taking that July 15th date and taking it to October 15th. Haven't heard that in the last couple of weeks, but that was topic of discussion at one point. Again, that's something to pay attention to, because as I said, things change regularly, and it could change again.
Great. I want to just thank you again both so much for filtering down that information for us. The links and the images that you provided will be so helpful. I know that Jon mentioned in his presentation there were links that you could click on. You won't be able to click on them directly since that was a screen share. However, we will post those links in the show notes, which I just invented, that will be on the Facebook event, which is probably where you got the link to get here. And we'll also post them in the comments and information when the YouTube video goes live. So you'll be able to find easy access to those links that were provided in the presentations. Thanks again, Randy Fackler and Jon Sattazahn, for your wealth of expertise and information, and for taking the time today to share it with us. It's good to have you. Matt, I'm going to hand it over to you to let us know what's happening next week on Etown Links.
Great. Thank you so much. Thank you so much, Randy and Jon, for all your expertise. We really appreciate you sharing that with us. It's always helpful to have experts who have kind of gone into the weeds and figured out all this stuff, for those of us who only under duress tend to address these issues or think about them. Next week, join us at noon on June 11th. Note the date change. We're going to Thursday just to be different, but it'll be same time, same bat channel at noon o'clock. Our topic will be the new normal, sanitation regulations. Greg Thomas, Director of Food Service at Masonic Village, will be one of our panelists, as will Mark Bruce from Bruce Environmental and Response Management. So thank you again for joining us for Etown Links, and we hope to see you